Well, hello everybody, I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves what happened last week, what does it tell us about the coming one. I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. If you'd like to subscribe, anytime content is pushed, you'll be notified. As far as these markets and what they did, last week we had pretty much a down week until Friday, and then a reversal, and not so much a reversal, but a two-bar failure, which we'll look at on the euro, led to a big reversal in the market. Market finished up pretty strongly on Friday. The big hit was in the Russell down 3%. Just it's back to where the Dow and the S&P is, and Nasdaq still hanging up there with the real strength. But a noticeable difference, pullback as we were trying to break out, and actually had broken out on the Nasdaq and on the NDX, and they get reeled back in again. So let's look at the S&P. We had takeaway bars on Friday. So in other words, we get a big spill down, and then what do? We take it all away, go right back the other way. Notice the volume difference, but a lot of that is May Day in Europe and a few other places. Volumes were lighter, and so Monday will be more of the story than Friday was. We'll see if there's follow through off of that, but a reversal. If we look at the weekly, you press down on the weekly with more volume, and you're pressing into this high volume bar back from December. That was the Fed bar, if you remember. That week was the Fed week, got the big spike back up, and then eventually came down, eventually new highs, so forth, right? But that volume that we came back into was pretty good clip compared to that. Not enough to knock it out. We'll see if it tries to get back down there, but hasn't been able to get over this high. And you could also look at this as, hey, you tested the high with higher volume, but then again, last week was mostly down, not up. So I'm not sure that's well, I am sure that's a little bit of a stretch to look at it that way. If you look at this thing on the monthly, just kind of flattening out up here. Still, so far, no real damage. If you go back to October, and that October low now has printed as a swing point low. And so we have a low here now, a low over on the other end. But since that October low, it's pretty much held in this range. And that range has been pretty tight, compared to, what this market has done previously. Because if you look back, since 2011, September 2011, this market's been on a tear to the upside and really hasn't given anything back other than one time. You had one little pullback there, that October pullback that immediately was bought. And other than that, it's been pretty much up the whole way. And so now to see this thing go sideways and stay sideways for an extended period of time, I mean, we're talking about 3, 6, 7 months now. Well, 6 months really. We're starting the 7th one. That it really hasn't been able to make much progress at all. I haven't seen that, or we haven't seen that since we got back here, and that was 2012. So 3 years of up, kind of arrested, going sideways, but still no real damage to these markets. Looking at the composite, the composite had pulled higher, had gotten over this prior high, got over it, right, and then immediately sold off 4 days straight, takeaway bar on Friday, but it got underneath the bullish retest regen zone, couldn't hold it. That tells me, as it should tell you, that what had taken place to take us up has been taken away, and now it's more of a sideways move than an up move. And so when you look at it from that perspective, this thing's just trying to figure out where to go. Looking at it on a weekly basis, again, higher volume, spikes over the high, spikes under the high, but finishes in the middle so it doesn't really tell me all that much. And if you look at this one on a monthly, this one actually has been able to continue to extend, and at this particular point in time, the monthly on the NASDAQ composite looks pretty good. If you look at the NDX, this one also had gotten over swing point highs. If you look at the bullish retest regen on it, it failed even on the most optimistic one. Got underneath it, stayed under it. Did get back into it on Friday. That's a good sign. But you got to get back above it and start climbing back higher if in fact it's going to mean something. On a weekly, this one got over the high but couldn't stay over it, but had volume. So you tested the high, you've tested it with volume. That says, hey, this thing can go right back up there and test again. The Russell. Now the Russell, of course, was the weakest. And if we look at the Russell, it really didn't get the takeaway bar like everything else. And one of the things I try to do is, and we do in neoclassical, is to try to say, okay, what's going on here? Russell represents small cap domestic stocks. Why would they not be able to recover as we saw other things recover? And the only thing I can come up with is, the dollar has been strong. That's what's been hurting the large caps. Well, the dollar hasn't been strong the last few weeks, or a couple weeks now. Actually, a bit longer than that. So is it a reflection of that, where these stocks don't look as attractive and people are rotating back into the larger ones? Or is it a reflection of the economy? Because we know that the numbers, you can see the numbers as I can. There's nothing magic about them. They haven't been very good. They haven't been good since October last year. And I know folks are expecting them to get better, but maybe this is a reflection of that expectation in the market, at least, not being there. The good thing, if you look at the Russells, the Russell came back to a retest regen bullish, got to it, tested right to the top of it, hit it with more volume, but so far hasn't been able to do anything in terms of damage. We'll see if this wants to bounce or if we're going to get some more downside as we go. When I come back, we're going to look at currencies, at bonds, because that's what's really driving this market, and the overseas. And so we'll look at those and see what they tell us. Be right back.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So as we come back here, I've been talking about the dollar probably going to get a bounce from this area, and it still looks that way. And that is that, if you look at what happened the last 3 days here, volume expands tremendously, right, on the spike down. It gets a hammer type reversal, yet it tests again the very next bar, test that low, less volume. That's a good sign. And then Friday really didn't tell us anything. Inside bar, just sitting there. If we look over on the weekly, right, the weekly has come back into this bar. That was the bar we expected to see it try to get to. Well, it did get to it and actually got into it, and it's pushing pretty decent volume as it's doing it. There is a range at the top, underneath, right, and there's another one underneath that if you want to go equidistant on the way down. So in other words, this could, if it continues down, could break all the way down to this level. But it looks like it's going to bounce, not just the dollar itself, but the other the components to what the dollar does, and I'm talking about Europe in particular. If we go look at the euro had pushed higher, had an ABCD structure, got a nice big bounce, actually overdid the ABCD structure on the way up, right? That took it to the highs, it gets over the highs, and note the volume expansion as it goes over the swing point high. That's short covering probably. Short covering gets you another day, and then what does it do? It gets over it, back under it, less volume, right? Extended move, 2-bar reversal. This is going to try to come back. And the fact that this is going to come back and it's about 50% of the weighting of the dollar index, that dollar should get a bounce off of it. Where's it going to come back to? Well, it should come back and do a retest regen bullish now off these prior swing point highs that it broke. And so the test on the euro will be the test back into this area. That will be the test. We'll see if it holds. Therefore, let's just take both examples. If it holds, comes back, holds in this area, you can get an ABCD structure to the upside, right? Which would take it all the way back to prior highs. If it doesn't, well, it's a different story, right? If it comes down, maybe gets a little bounce and then proceeds down, well, it's a different story, because then you would have wiped these out. That takes away the goodness, right? That says that no, this isn't the case, it's really that. And then that would be a different story. Now, I expect at some point it really is going to go down. If we look at it on the weekly, you can see why. It came into an area that it should fail, at least on the first bounce. That's where it's at now. The daily says it probably will. That should take it back into this area. That would be where one would find out, is this thing bottomed or not? Until we see that, we won't know. What we do know, looking at this chart, is that this thing is in a serious decline and has actually been on a very steep decline. And so one should expect this thing to go sideways for some period of time. In other words, it doesn't have to reverse to succeed, right? It just needs to go sideways for a while. If it does go sideways for a while and really can't lift, in other words, let's take a good case and say, oh, well, this thing lifts and it lifts all the way to this area. Yeah, that'd be a pretty good bounce, right? From, you went from 137 to 100 almost, so roughly 35-point decline. If you came off 35 points, the 103 area, and you got even just half of it to be 17, right? That'd take you back to 120. So the 120 area is back here. Well, this is a fairly good number. If you get halfway, well, that's even better. But anything down in this area is just a normal bounce. And the point of saying that is that QE is in Europe. And that's a big fundamental negative for the euro. And so to get a bounce, is kind of a gift for anybody that's looking for it. But don't expect it to go flying back the other way. If the economies are weak, they're going to be weak around the world. They're going to QE it more, and it's going to get even less value compared to the dollar over time. That's the euro. If you look at the yen is already reversed, tried to break out on the daily, reversed back down. What is this doing? It's just a range trade, and this is what I expect you to see. I expect to see the euro do is build out some sort of a range, right? Buy enough time to do what? To work off this steep decline that you had in the euro and that you've had in the yen. Work it off in time, not price, before you do another decline. And that's the way it looks. And if that's true, dollar is going to rise again before it's over. These are going to decline more, and that's going to put more pressure on U.S. equities as a result of the dollar. If we look at the bonds took a pretty steep drop. We had bonds selling off in Europe, rising rates there. We had them selling off here. It's done as ABCD. It's into the big bar. It may try to test the bottom of it tomorrow. I expect it gets a bounce out of here. But then the question is, what does it do from there? Because at this point, if you're looking at it on a weekly, you've got a pretty good ABCD structure now to the downside that does what? Takes you right into that big volume low. That looks like it's really going to be the target before this is over. So we may get another little nested bounce inside this that would make for this target area. And so that's kind of the way the bonds look like they're shaping up. If the bonds are selling off, the market's going up, or something else is going on that I don't understand, I expect the market can bounce off of that. If the euro does the sideways thing, then the markets can, try to lift in unison. And I expect, our markets, as I've talked about, are really dependent on the overseas markets. And so let's pop over to those next. And if you look at those, it looks to me like, Asia hasn't really gone into any kind of a stall yet. Well, it's gone into a little bit of a stall, but it's not really developed a range yet. And so Asia could actually push higher. I don't see anything to stop it quite yet. You had this range, you got over it, you're holding it right now. Now, I'm looking at the Hang Seng. If the Hang Seng gets back inside here, then we finally have consolidation. And that would be true of the Shanghai as well. If we look at Europe, right, and we'll start with the CACs, Europe already has entered into that range trade that we talked about, and we highlighted here last week. And we talked Friday that we should see some sort of a bounce in the equity markets, the U.S. equity markets. We talked Thursday night, and people, I remember distinctly, I'd gotten a bunch of emails, and I kind of was adamant about, get real. I mean, this market is not going to die, at least not yet. It's going to get a bounce, and there was certain things that made you think that it would bounce, and of course it did bounce on Friday. This is ready for a bounce. And if this bounces and gets back up into this range, right, the key is going to be as it comes right back in to do what? Test that low, right? So you hold on the retest regen here, that bullish retest regen. This is the CACs now on the daily. You hold there. The issue is going to be when you come back up to do what? Test back into this bearish retest retest regenerate zone. So in other words, you bounce out of here, you come back into this. If you can't get higher, then you're going to come right back down and you're going to test it again. And if you notice, it hit it with volume. I expect it will come back and test it again. So that tells me that more than likely what you're really going to see happen here, you're going to see this come down like it did. You're going to bounce up into this zone. And it depends on how high it gets. But it's going to set up an attempt to go lower and build that range out lower. And then that's going to be the gift buy down in this area if it happens that way, probably. That's the CACs. If you look at the DAX is already farther along, and it's a fulfillment of that, because remember the DAX had already failed on a retest regen of its high. Now it has gotten under two lows. It is a function of what's happening in the French market. And so now it's going to come back and do its bearish retest regen. There's overlapping ones. I expect it to get into the overlapping area, which is here, right? And then the question is going to be, how far does it bounce? And does it set up an attempt to go lower? I suspect it will. The bounce, let's just assume it's into here. Bounce takes you down to there, and it takes you what? It takes you back into something a little bit more interesting. So that on the daily is kind of where this looks like it wants to go before it's all over. So bounces, yeah, but more consolidation, broadening of the range, probably. Not a guarantee, but probably. And then that would give us, this clue. The clue will be is how does it act when it gets back into retest regen on a bearish side, both CACs and the DAX. Looking at it here, you can see that there's certainly room for this to trade lower. In other words, we've got a range trade here, kind of a range inside the range, right? And if you were to take another small one, that would take you down into more of the interesting bars. If it does two more, right, that would take you down to the interesting bars. That's the retest regen on the prior highs. If it gets that low, I don't think it's going to get that low though. I suspect what you're going to see is you're going to see this area hold off of these bars, probably the second of those two, right? This one here, hold into that area. That would probably be the range expansion. So if you look at it from that perspective and draw it out and just do two ranges, you know, the range is about there, which takes you back into this bar, which is this high. Probably doesn't get deep enough to get back into here. It could do something less, which is what I was just showing previously, and that is it doesn't do that large of a range. You actually end up with one more small one, and that one more small one takes you right into the top of that bar. That's kind of the way those look to me on a weekly. The CACs is set up about the same way. That's the overseas markets, and right now the overseas markets are the markets, right? They're the markets that are driving our market. Right now these markets pushed up, now they're pushing sideways and consolidating. They may get as low as this bar, even as low as this bar, more than likely probably here at best. They're going to build out a range, they're going to consolidate over time, and then eventually, I expect at some point, they're going to try to make another run higher. And so that's the DAX, the CACs are the same way. And I would expect that, you know, as these get their bounce, we may see that consolidation in Asia, and if so, that's going to mute our bounce to some degree as well. So that's the way it lines up right now. These markets look range bound to me, especially ours, and totally dependent on three things. Two that are pretty much driving the others, one that's driving almost everything, and that's the currencies, the bonds, overseas markets. Folks, thanks for joining me. I appreciate it. Tell a friend, tell two. Send this, you can comment on the site. You can also send it to friends. You can, send links and so forth. If you can help me help you, then we all get benefit from it. So spread the word if you can. Have a great one. Thanks. Take care. Goodbye.